Hey everybody, welcome back to Trading a Smaller Account. My name is Mike Fairborn, sitting in for Barb Armstrong, who is out at our San Diego event, in that live event there. It's good to be with you folks. I want to take a look today. Three separate spread trading strategies under current market conditions. We're seeing some weakness in technology, kind of led by some of the announcements. The announcement from Broadcom likely yesterday in the chip sector, semiconductors. And so that's putting a lot of pressure on the markets. That particular industry is heavily weighted within a number of the market indices. So we'll look at a trade there. And then also in some of the other areas where we have been maybe rotating into some strength for a little bit now. So maybe some of the spread trades in terms of the bull put spreads and things along those lines. So it is an interesting kind of setup with this volatility, but that's actually a benefit to us as well with that volatility being up, all else equal in terms of selling options. So with that though, welcome to each of you here. Hello to you, Josh. We've got Jay Richardson, Robert. Life in the Fast Lane. We have many others here. Radio Wayne. Haven't seen Radio Wayne in a long time. KH, good to see you as well as Trader Joe. Life in the Fast Lane. I'm joining the chat by a good friend of mine, colleague and manager, Mr. Scott Thompson. He is in the chat. You'll see him as ST in there. And he had provided the playlist already for this class. So appreciate you doing that, Scott. Folks, let's dive into some disclosures so we can get going right away. Okay, options carry a high level of risk. They're not suitable for all investors. Now, information here is for general information purposes only, should not be considered an individualized recommendation or personalized investment advice. Paper money software application for education purposes only as well. Investing does involve risk, including the loss of principal. Past performance is no guarantee of future results. And remember that short options can be assigned at any time. If we do run into some of the dividends out there as well, just wanted to note that dividends can be cut at any time as well. And also, just a quick note that stop orders aren't guaranteed at or near that price. In fact, instead, they do compete with other existing market orders once triggered, or orders in the market once triggered. Okay. With that, let's go ahead and take a look at where we are right now. S&P 500 index. Folks, we did hold up a little bit, didn't we? Did we hold up a little bit yesterday? We bounced back to a degree yesterday. Of course, it didn't last too long. Oh, sorry about that. There we go. It didn't last too long. We actually, dipped back down again today. And again, a lot of that is going to be the weighted side of the market itself. Specifically looking at the S&P 500, you can see over here, yeah, Google's actually a little bit, slightly down to flat here, but look at the big movers. Look at these big blocks in here: Nvidia, Microsoft. Apple's up slightly, but you've got Tesla down, Amazon down, some others down as well. Can we see? Yeah, AVGO is not a Magnificent Seven, but that is a big block, and that is part of what we did see in terms of weakness yesterday. I think really kind of laying into the markets here. In fact, I'll just pull that up right now under earnings. Don't know if you guys caught this, but that was a sizable dip to the downside, which we are continuing to go lower on right now. And anytime tech stocks are kind of really like showing extreme strength to the upside, it's always important to sort of be mindful of the fact of what can happen in terms of, let's just say, for example, a uh, an earnings announcement and what that can do to us. And by the way, it can be tricky, even, in terms of trading a smaller account, what that might look like uh, for these spread trades that are even set within some of these lower or upper ranges. They can easily be hit. Just be mindful of earnings there. Sometimes you have to just go way outside of the range if you want to get out of, let's say, that normal. Well, I don't want to say normal, but it can be an interesting point in terms of just the percentage move. A lot of times, you're going to be somewhere around, I mean, on the high end, maybe around 20%. I'm just going to go from highs to lows here. That was close to 20 yesterday. I guess you could say we're basically at 20 right now, given the high, the full range of yesterday to where excuse me, a couple days ago to where we are right now. So we did actually have a trade in the swing trade account that I have, the swing trading class. we did elect. I watched it the second day, but we got out ahead of earnings for that very reason. Now, this was just a directional trade. This was like 50 shares, and that can be the issue. Now, we could have been heroes or or zeros. And you know what? After you've already had a little bit of a bounce over here, if it is earnings that brought you up to that level, you got to be careful. Anyways, that does tie into our discussion a little bit here. And let's go ahead and take a look at this because a lot of tech has run up a lot. In fact, we see like semiconductors with that. I mean, we do see Intel down. Intel's down still about, getting close to 8%, had been really quite strong. AMD down about the same, real close to 8%. Some of the, let's go NVIDIA as well. NVIDIA's down about 4.5%, but down nonetheless. And it's been consolidating for a little bit. But one thing that traders might look at is the possibility, because the index itself has been rolling a little bit. Um, you can see over here, uh, in terms of, well, where we are. Well, yeah, rolling, well, the last couple of days and then really kind of coming down. But where could we go? It's a really interesting question. One of the things I wanted to look at real quick, because this can help kind of in our assessments as well. But look over here with me. There is a prior high here, and there's actually a prior low here, just talking about technology. And within here, there's kind of a bit of trading activity. Um, one second, folks. Okay, and so one of the things I just wanted to highlight is as you look at this, I just want to take a look at the 30-minute chart and just see how well we're holding up. Well, this gives us a little bit of better breakdown in terms of that basket of tech stocks that you can see over here. So we got that high, we've got kind of a gap down over here. We kind of held that level. You got some other highs here, not to mention off that's the bottom level with a gap over here too. This is an area where we could find support, maybe. It is so you can kind of see this range right here. So we don't know if we'll get a pullback there, a continuation, but we have to say that that's a really, really big run. And I'm just going to state this right now. It's not too unusual for big runs like this to pull back 50%. Yes, I said it, 50%. Here's your fibs as a guide. Where does it show us to go to? Around 2,700. You can see that, but I'm throwing this on here just in case. 23.6, 38.2, 50. Sometimes prices can anchor with these levels. You can see that that 23.6 does anchor actually pretty well with the prior levels of support right through there. We'll see if it does hold, but these are some other points, and you just never know. So what I wanted to do, long story short, is to take a look at, maybe a company that hasn't been trending up as strong because, we have seen some sharp reversals, but one in the tech area that might still be showing weakness that has also been trending down for a bit and showing weakness today. Because if we're looking at bear call spreads on the other side to maybe tap into some of this weakness and viewing the VIX shooting up a little bit here, some of these higher priced tech stocks could be an interesting element. So let's just take a look at it right now, as you can see here. And all right, so something like a Meta. Meta has been struggling. It has been down. You can see that it's been flat for some time after this pretty big gap to the downside, right? And a lot of that was sort of a guidance gap. Some of the numbers they hit were actually okay, but the guidance here wasn't as great. But folks, you can clearly see over this range, yeah, lower lows, lower highs. That was a new low. We don't have a new low yet, but when you're looking at the bear call spread, for example, it can be neutral to bearish. It can even be a little bit bullish too. Notice over here, we got the top of this gap. This could be very difficult, particularly in a difficult environment in technology, at least for a period of time, as we might bounce around this level. There could just be, I mean, anytime you gap down, this is just noted for resistance. The top of this gap here is about 665. So if that's where we're going to be selling a minus 665, the call there, buying one up above it, we could continue to hold into this range. If it breaks below 600, that could even be a positive as well. But some real weakness over here. We're actually below the 50 on the RSI. Um, yeah, really flat in terms of money flow. Not too much going on there in terms of volume as well. And like I said, it's just been weak, and that gap can be really difficult. So let's go ahead and just take a look at that area right now on our trades. We'll go full screen here as we start off with the the bear call spread first. Now, I wanted to look over here. We do have a little bit of time between where we're at right now and actually, July. A lot of times traders looking for the 20 to 50 days. I'm going to go ahead and select a 35 in here. I looked into this and I'm going to tell you that we are getting the same premium here, the same exact premium for these strikes right here. So if I was going to look at that 665, let's go to it. Call side here. So used to looking on the put side here, but 665, if we were to sell this one and buy the 670, well, let's see, it was giving me $1 before. I'm going to shoot for just a little bit more here. I'm just going to say 95-cent credit on this. Okay. So if we are able to hold above this range, and by the way, we are starting at a delta here to sell at about where's our delta? About a 24 delta. Again, a delta is a reference to a $1 increase in the underlying price of the stock. So with every $1 increase in the price of the stock, the range here, the option range, will adjust by the amount of the delta approximately. I'm at, yeah, 665, about right there, 0.24. But we're well within the range where a lot of traders will seek for an expectation of about a zero point 0.2 to zero point 0.4. That might work here in this case. What we'll do though, in case we do get short-term weakness, but longer-term maybe strength, is we will set sort of a target range to exit this. And I think Barb has used, you guys correct me if I'm wrong, but maybe, I'm sorry, not a 0.8. It would be an 80% of that amount, which is about 95 if we can get it here in terms of a credit. So let's do this. I'm going to go ahead and with this scenario, let's just pull this up real quick so we can get this in line. But let's see. So for example, let's see. I'm going to take a look, by the way, I'm going to look at our um our monthly July as well. This changed a little bit, and I'm just looking over here at some of that open interest. It might not be. I think we'll take a look at the spreads here, but going out just a few more days, we might do a little bit better here. But we can also multiply this just by 0.2 to get us a general range. Maybe closing it around 20 cents would capture, roughly 80% of that. Before I do that, though, I do want to come back here. I saw a little bit of adjustment, so this is interesting. We'll go ahead and just kill this one for now. Let's just take a look at the same uh, levels over here. You're getting a lot more open interest, the thousands, so a little bit tighter spread, maybe a better fill on the close as well. So here is the 665 and buying the 670 right there. So we've got $1 credit. Technically it's about a dime higher than it was before. I'm just going to go ahead and stick with this for now. The deltas are roughly the same, 22 and a 24. Okay, again, but as we look at this, yeah, we're basically just stating, hey, it can do one of these. It can come up here, it can come down as much as it wants, obviously, or sideways, getting a little bit of weakness here. But if that continues, if we start to see continued weakness in tech, that could kind of help us with this position. The only thing I would say is there maybe is, clear, well, there's a sign of recent support at 600, but this is one that has been showing more weakness. And if tech comes down, maybe it breaks that. So anyways, let's go ahead and take a look at it. All right. And before I do this, let's go ahead and set it up the way we mentioned. First trigger sequence. I'm going to right click on this and we will go to create opposite order. Tail cancel. We'll set this at 80% would be like 0.2. So if you wanted to take like a 20 just on a single contract here, we'll be looking to close it at that level if we are able to get a fill on it right there. Okay. 80% as opposed to the whole thing. Of course, you could always take that off. Always take a look at the dialog box here as you go through this. Your buying power effect, etc. Yeah, that does factor in a couple of different things, but we'll put that in for now. So that's kind of our play on technology. Looking at a weak stock already, or weaker, clearly weaker than the market. That is a Mag 7, but also participating, being there to participate if, let's say, for example, weaker technology continues to impact a weaker stock already. Okay. All right. Well, welcome all of you just joining us now. Good to have you on board. Mike Fairborn sitting in for Barb Armstrong, who will be back next week. Again, she is out at the San Diego event, and good place to be, San Diego. I have a sister out there, and the craziest thing when I went there for the first time, the leaves stay on the trees. I went in the middle of winter and I couldn't understand it. You know, in Utah, they fall off every year without a doubt, every single year. But it is fascinating. Good weather out there, good place to attend a live event. Those are great. If they're ever in your neck of the woods, consider checking those out. Folks, I'll tell you what, as we continue on, do a sharp change in direction here. You know what has been moving? If you've been watching it, and we've seen a little bit, I'm going to talk a little bit more about this later today in this markets and sectors, looking towards the next half end of the year, what to potentially expect there with current strength and situations. But if you've been looking at the Dow, dollar sign DJI, and the DJT for that matter, we have seen, it's not as strong. It's been lagging a little bit, but there have been some real strong stocks out there. It is down, 0.77%. So not a big move to the downside for the Dow, but some of these groups, I'll just give you a quick flash of this over here. Our sector rotation grid, I'll go full screen. Everything on a potential sector rotation 1 week basis, very, very short term, relative basis, how our sector's doing, relatively speaking. So it's kind of an insight into what could be, there's our fill right there on that meta. But it's an insight into what some institutions might be looking at. Notice this week, yeah, clearly weakness within, and by the way, technology has been weaker than the S&P 500. So even though it has accounted for a lot of these moves to the upside, look at the differences over here. Energy kind of, up then flat, but a lot of these have been really, really quite strong. Industrials, healthcare, and staples, really, really quite strong. Of course, you have some others down here as well, but you can see the possible rotation. So it's interesting to see that rotation occur in the market. If we were to focus in on the industrials, great place to find industrials is in the Dow Jones Industrial Average. Let's go back to our chart over here, taking a look at the Dow. But what's within the Dow? A good quick way to take a look at it is just come over here, pull it up. It is a a public folder. It's not personal, it's public right over here. The Dow, you can pull that up, and when you do, you can take a look at some of these. That's what kind of drew my attention to it with some of that sector rotation, what we might be finding in here. It's not all industrials, but there are some clear industrials out there. For example, like Caterpillar. Look at Caterpillar. Now, I'd read years ago in a book, and when I say years ago, I'm talking in the 90s, about a tendency, a trader in the 70s and 80s, by the way, who was talking about during that time frame, that a lot of times when stocks get above, uh, let's say, for example, 90, sometimes they get sucked up to 100. Now, I've seen that happen actually fairly frequently in the markets. Doesn't happen every time. Nothing's a guarantee in the market, obviously. But here we are. We just add one more zero to this. 900 to 1,000. Seen this as well. Do we see the possible potential setup for a move like this occurring? I know we're down a little bit today, but that could actually be beneficial for a short put vertical bull put spread, right? Do you see it? And let me highlight this here as well. So we're looking at neutral to bullish. It's a very expensive stock. Just selling a put outright over here for income could be very, very costly. We'll take a look at that too. But look at this move. You recognize that? That's kind of like a flag pattern. That's kind of like a breakout. And that's kind of like a retest. It is expensive, so the short put vertical could be interesting here. I want to explore that right now as we dive on into this. So what I want to do, we can still look at the Julys over here too. But that puts us in, if we're looking maybe below a support level. I mean, look at that. There's a gap right there. And within that gap, you're going to find this point, this point. We've already broken above this high, kind of resting on that and near this level, support and gap potential support right there. That puts us around 830, 830 to still be within that range. So I want to take a look at that real quick as we go into this real fast. Okay, so let's do this. I'm going to go over here and pull this up right now. And let's go to their trade tab and we'll stick to our Julys over here. We're on the put side in this case. And so I'm going to click on the 830. You can see the delta over here on that is right towards the lower end of that range. These are 10 wide. It's an expensive stock. But to highlight a couple of things here, it'll still shoot for the mid on these ranges. And we can also look for a target level here as well. But if we were just looking at the 8, just to highlight this, just look at this. If we just looked at the 830, look at this. So here's your 830. Wow. A little bit of a buying power effect there, just selling the put outright. Substantial here as well in terms of max loss. Now, of course, this assumes that the stock goes to zero, but because we could be assigned shares, right, as we mentioned. But if you look at this, there's your buying power effect. That's rather large credit as well. But there definitely is a buying power effect component there that's quite large. By putting on the spread, that is buying the 820, we actually define the risk. So it's a 195 credit right now. 195, getting close to 2. There is your buying power effect right there. You get your max loss. Notice that that mirrors the buying power effect. Okay. Um, with the volatility of the market, we can go ahead and set up another. What if we're at 2? Yeah, we can set this up for, let's say, 40 cents or something to try to capture 80% of that move. If we were looking at it that way, let's see, first trigger sequence. I'm just going to right click, create opposite order. Always go GTC first. Set this down to about 0.4 for those that might be looking to do something like that, right? To try to capture 80% of this move as you're looking at it. Let's go ahead and just confirm. Always still consider that dialog box what we're looking at here. That's just a single contract. I'm just for the heck of it, just for an example to mix things up a little bit. It's all an example trade anyways. I am going to we're going to do 2 contracts here, and that's just going to increase. You can still see. So that puts our credit, total potential credit. Let's see. Yeah. Well, we've got that amount. What happened here? What on earth happened? Hang on. I don't know what just occurred. Something, did I hit something? We got to make sure because see, that's why you check this stuff too. You can take a look at it, just confirm and see where you're at this point in time. I am going to do this. I'm going to start over. We're going to start off with 2 contracts though. Okay. So here is the 830 that we just looked at. There's the 820. It just jumped up to 265. So it's bouncing around a little bit. That's what the deal was here. We're going to do a couple contract. I'm going to set it up this way initially. First trigger sequence, create opposite order, and good till cancel. Now, if I were to go down here and just say 250, 250, okay, we can easily come up here, do a quick computation, clear that out, and just go in here and just say 2.5. If we're looking to try to capture 80% of that point, to multiply that by 0.2, so 50 cents. Brings it up a little bit in terms of our potential area to exit to capture that 80% of that move. So there you go. Let's click on this, confirm and send. Okay, I think we're looking better there. And there you go. All right. But that's trading with the trend and a few different setups over there. Now, I wanted to come over here and highlight too. Sometimes traders can just sell a short put by itself. I think one of the key conditions that you need to really kind of keep an eye on, though, is the buying power effect, especially in high price stocks. It could make more sense for lower price stocks. Say, for example, I mean, let's say, here's an industrial as well. It's Ford. Wow, Ford did dip actually quite a bit, actually, the last little bit here. It is coming back down to support. I don't know. I want to throw out just an example trade for somebody that might be looking at something like this. I don't even know where these are trading at, but I did want to look at it. I was just thinking about Fords. Oh, geez, look at that. It's so low priced. I mean, there you go. Your 13 is, yeah, about 18 cents or so. 14, you have to go quite high for the 14. I mean, well, the delta is actually only about 32. But just to kind of compare, I just want to show you a comparison here. Obviously, just selling the put down here, it can still be somewhat effective for trading a smaller account, is what I'm getting at here. There's your smaller account. The buying power effect, 218 as it stands right now, to capture a 43 cent or $43 credit. So that's not too bad considering the price of the stock. Ford was one of those interesting ones because you can see this massive jump over here. There was some revaluation that occurred because they've got this battery segment that was not being valued within the company that they thought could be very valuable down the road. Anyways, it jumped what they consider to be the future enterprise value of the company, and that's why you got such this massive spike here, right here. Don't know what's going to happen with Ford, yeah, going forward with Ford, but that could be something that a trader could consider. Um, if somebody wanted to do that, I mean, it's really tricky. I mean, there's some prior highs before you get to 14. There's some support levels here. Sometimes traders might want to get some indication of a possible bounce trade over here. Actually, on a big scale, do you guys see it? There's actually this small cup and handle right there, and there's actually even a bigger. I've seen cup and handles like this, and that could be, if that's the larger cup and handle, then you kind of draw this range here for a price pattern, and then you would simply extend this to the upside. Higher, 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 which is interesting. Where does that put something like this? Well, puts it a lot higher. You're looking at about, let's see. Yeah. So, yeah, you're probably around 25. You're getting close to 25 as an example on something like that. Um, let's just do one as an example trade, just a pure example. And I'm going to highlight it this way. When you are looking at these, you can go for a profit, excuse me, a premium. You're always shooting for a profit, a premium, right? Or to take a position. So either, with the short put. So I'm going to do is an example trade only here. They're all example trades, but just to kind of throw something in here. If somebody said, you know what? I think that there could be some potential here. I'm going to try to sell that 14. And what would that do just by itself? I wanted to mix up some trades. So if I just sold the 14 for July, well, if we're to get 45 cents out of this, 45 cents, $45, standard equity options contract, multiply that by 145. What are we looking at over here? So we just looked at it. Here's 218. We looked at the delta already, so an expectation of about a 32% that we won't go below that level. But if somebody was saying, I'm okay to own this here, I think there is greater potential in what Ford could offer down the road. I'm okay holding a position on it. It's a low price stock. It could still work. What I'm saying, it could still work for trading a smaller account, even if you own the position. You know, what's my max loss, buying power effect, and credit? Okay, one consideration, if it does get assigned to us, it could lower our total overall cost on the trade too. Because if I get it at 45, right? And here we are at, and I have to buy it. Let's say the option, the stock itself comes all the way down to 45, excuse me, to 14. Let's just say it's like right at 14 at expiration, and we get assigned here. What is our total cost? Well, we still get to keep the premium, right? We still get to keep the 45. So it's like buying, well, okay, some traders would consider it like this. We're still buying it at 14, but in terms of a total cost, it might be something like getting it at 313.55, right? Because you did get that premium, and so you're maybe closer to the mid-range there in terms of what it is with the actual premium you're receiving. I don't want to confuse it because you are buying it at 14, but you are getting a credit as well. So park that in your mind for sure, right there, okay? So be very, very mindful of that, folks. All right. So let's do it. Let's just put it in right now. It's up to 46 because prices keep dropping here. Okay. We're going to look at it as potential premium, but also we're okay with a position. All right. Let's go ahead and send that through right there. And there you go. So there are three strategies we just put in, but guess what? We've got time. So I wanted to look at another one over here too, in terms of strength. Now, you notice as we did look over here at our sector strength, sector rotation potential, right? Some of these healthcare companies have been really, really quite strong. Let's just take a look quickly at our scan tab over here, and I'll just kind of highlight what some of these might look like as we go into this area. In fact, if we come on down just to industry here, we can just look at everything that's within that healthcare right now and just seeing what's been moving over a particular time frame. You can see over here, like some of these have been really quite strong off the bottom. And but let's say BMY, just thinking in terms of short put verticals as well. You got Johnson and Johnson, some of the bigger names, but these are all the companies that make up this right there, that sector rotation that you're seeing. So jumping back to it, all right, and looking at this, let's go through some of those right now. In fact, I think I've actually set one up over here. I've got a number of these personal, yeah, I do. See, you can set these up, which are really great. Like you come over here and healthcare sector right there, S&P 500 healthcare sector, which I've created just as a personal folder to take a look at, but they're all right here, right? There's AbbVie breaking higher. Got some lines on that one. ABT's been down. There might be, some value component in here as well, but you can see that we have been taking out like this longer term down. No, we haven't. We have not taken out that downward sloping trend line just yet. So that trend, we don't even have indications that that's flipping. I will say this with BMY, here's Biogen, but BMY has had a pretty good rally to the upside. If you look at this longer term, I could almost say that that's like a bull flag, sort of a weekly type bull flag is what we could be getting here. The one thing I do have to say though is that lower, 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 and from this high, lower, lower, lower. Still lower lows and lower highs. But if somebody was anticipating the possibility of a bounce somewhere in here that it could hold as you're getting near, I just noticed that it started to kind of bounce off of that level there and here. I don't know. We obviously don't know if it's going to hold or not, but that's kind of a sharper move. We could see some rotation potential in here as well. So these are questions to kind of consider on this one. Let's see if we've got one that's a little bit stronger. How about well, J&J? Okay. Now, this is one also kind of flaggish coming down over a sideways range and a consolidation possible bounce off of 220. You guys think about that. I'm going to pause for just a second. And no, just to let you guys know, if yeah, if you're getting value out of this presentation, smash that like button. There's also a survey link in the chat that Scott has posted. There's just two questions there. Yeah, if you get a chance to fill that out, that'd be fantastic. Lets me and my manager both know, who is Scott, what you guys are thinking, any topic requests that you might have as well. But love to take a look at those. It's always great to get direct feedback there. And also, too, if you did have any, those are awesome for specific feedback. But if you had any notes that you wanted to put in as well, even additional requests, you can always put those in the comments section at the end, well, at the bottom of the video as well. We do actually review every single one of those as well for you too. All right. Well, with that though, back to JNJ here. And as you can see here, maybe some support off 220. I can actually come back and just kind of highlight that, yeah, there was some highs over here, bounce, bounce, and really some decent strength coming into this level. Now, if you take this out, I mean, and then we're looking at maybe a short put vertical over here because we are, trying to trade a smaller account. We've got some higher prices over here. It's expensive. We just saw what that looks like when you're selling the short put by itself. But a bull put spread, selling the higher, buying the lower. Look at this. I mean, what does 220 look like? If we thought that was going to be support, I'm going to go back to the trade tab and we'll stick to July for now, but that 220 is right here. It's right on a 20. It just flipped to 21 as soon as I said it, but a 2021 delta right in that range. Some really, really interesting open interest here. You're in the thousands. Of course, another good reference for that liquidity is to look at the stock price, 2.7 million. Let's go ahead and take a look at that. The 220, as we look at it though, if we were to sell this one, again, quite expensive if we're just selling the put. Might not work great for trading a smaller account, but we can really reduce that too by buying that strike just below it, the 210. And what do we see there? So we're getting about $1.38. Some traders might say, Mike, that's not enough. I'm not getting enough premium here. You have to look at a few different things. First of all, the implied volatility is not that bad on this option. In fact, I want to check one thing on this implied volatility, just reference the chart itself in terms of implied volatility. Let's do that right now. So implied, oh, that's enough. IMP, you're going to see it over here. Implied volatility, actually not too bad from its higher range. So all else equal, we do like a higher implied volatility because that can just make for a juicier option spread. I want to look at one thing too over here. Let me do this real quick on this particular one. Okay, let's do this. I want to take a look at, I thought RSI was showing strength. We're getting some pretty good money flow as well. Let's clear these out for just a second. I want to look at volume on top of the money flow. This is the Mobius, just a coder out there that they used for these volume waves. And I just wanted to get a sense of how the most recent rally was in terms of strength when you compare volume. In other words, what this is doing over here, if you guys can see that, oh, that's better. Do it that way. What we're getting over here is on this move up here. So I'm looking for the possibility of this trend to continue to the upside, but how did kind of buyers fare relative to sellers? Well, look at this. We knocked that out right there. So this downward move, you look at the prior move versus this move, we had more buyers coming in here. So all else equal, that could be an interesting point for the possibility of a double bottom. There could just be more people taking positions, and we're seeing that follow through now. In addition, the pullback did not exceed our level over here. And so that can be of interest to this. Now, this is a think script. Think scripts aren't guaranteed for time and accuracy, but they can be somewhat helpful. They can be clearly helpful in, if the data is coming in well, then it should just act mathematically. But yeah, so we just wanted to make that note. But I'll share this with you guys if you want to take a look at this in the chat. It can be quite interesting. It's a different way to view it, just to compare volume coming down versus volume coming up. It's just hard to see it any other way. Oh, perfect. Scott, yeah, I did talk about that yesterday in the ThinkScript class, and Scott just put a link in there for it. In fact, you know what? That might just be an easier way just to get it. It's just right there. If you click on that link, in fact, I'll just highlight where that's at. Thank you for doing that, Scott. Appreciate it very much. Okay. By the way, while we're here, definitely subscribe to our Trader Talk channel. Love to have you guys on board. We're up to 198,000. I think many of you already are. But if not, we are getting close to that 200,000 mark. Just subscribe. Love to have you on board. And if you do, you get these playlists that are in here that we set up for you. That's the one that Scott just had sent through. But yeah, if you come in here, you can find it just right down here. Here's the link at the bottom. Yeah, our buyers beating sellers, and that volume can help you with that. It's just a cool way to kind of view it, and we have a scan in there that will actually help spot when this is exceeding this level. So it gives you a sense. Do you have buyers behind it? Are the buyers beating the sellers? That's what it tries to help you do. Anyways, I wanted to see this one because I think it is fascinating here. Because if you get buying activity behind there and you're looking at unbalanced volume or money flow in general, could be kind of insightful. Now, with all that, and that was a lot, let's go ahead and just take a look at our 220 here. On that trade, since we just looked at it here, the 220 and the 210, about a 140 credit right now. Let's take a look and just review this before we cap this off here. But look at this. Here's the buying power effect, about 860. So a huge difference. And by the way, remember, you can define that loss as stated right there in the order confirmation dialog box. There is your credit here. That is on a per contract basis. Of course, if we wanted to do more contracts, we could do just that. And I'm going to go ahead and just send this guy through right now, and we'll see what we get. Now, I didn't put sort of a limit to cover this on, but just we're throwing out a couple of different perspectives over here. But again, looking for potential strength, because if something like this could either go sideways, up a little bit, or really up as much as it wants, or even down back to these levels. That's, well, up, down, sideways. That's three directions. And traders, although short options can be assigned at any time, they're looking for, the price to hold above the strike price to collect. In this case, we might just be shooting for the max gain. We didn't put any limits to close early in there, but that's what we were seeking out. All right, everybody. Well, great to be here with you today. Barb will be here next week. You guys have a fantastic rest of the day and a great weekend. You're almost there. And with all that, I wanted to say thank you to Scott in the chat for helping out as always. Good to see you all, folks. Hey, a couple more hours. Be sure to tune in for our other classes that are coming up later today. I can tell you, at the end of the day, I will be there for markets and sectors. We'll drill down more into market and sector analysis and take a look at what might be of interest going into the end of the year, the second half of the year. But on that note, see everybody. Have a great day.